But once we finished that, a lot of groups in crypto, because it is so volatile, you see groups that don't always last through. We've been through about 3 winners, but there's ones that were with us in the first winter that aren't here anymore. So what we did is we doubled down on, once we knew we had something special, we said, okay, we need to double down on technology, compliance, regulation, all the things that are going to come for this emerging technology and asset. And that's where we focused down on. We hired a great CTO, our chief compliance officer. We actually brought her, Marianne Bullion, over from the FDIC at the time. So this is early on, 2018. Today, you hear a lot about traditional finance regulators, et cetera, crossing lines, but early on, it was a former regulator to come over and work in crypto. It was interesting. It was fun to watch.
Yeah, no, I can imagine the amount of impact that they have right away, not only just within helping the technology move forward, but within getting people to trust kind of that core technology and that you were building at that time. What was the process like building such a new technology that was then, you were going through phone calls as a manual process, you're taking in clients, allocating resources into buying and purchasing Bitcoin, and then now you're building technology around that process. What were the questions you were asking your clients in terms of, identifying ways to make this extremely usable? And before you answer, it's just, I hear so many stories about, going through the pains of building a product that they think will fit their client or customer, but alternatively, and is founders that will ask questions, and that kind of guides the user journey. What was that experience like for you? And what was that journey like?
We were really lucky that our early founders or early adopters of the product were all tech guys. I called them engineers. So we had NASA scientists, we had IBM retirees, we had anybody from the thing, all the group, right? And so we knew, wait a minute, these guys are way smarter than us. So let's listen to what they're looking for. What do they expect us to look like? Now, we also knew the parameters. This couldn't operate like a typical Coinbase. This couldn't operate like a typical exchange. It's retirements. So we have to keep a custody model in. We have to think about security first and foremost. Security was really at the beginning and since has been the biggest prerequisite of our roadmap. And it always is changing. Security gets harder and harder as technology evolves. Like you've got deep fakes now. I just saw a piece today in Economist about the risk of your employees and just their personal behavior online in a remote condition. These are all things you have to think about as you build out that instance. So yeah, that was kind of an interesting leap into the next evolution of this business. And then we just wanted to keep driving forward. So as the crypto market continued to heat up, we made sure that we were the first to define a mobile app for that, define secure processes for opening, funding, and trading accounts, all the pretenses that you need to have a successful platform for clients. And our original clients, to this day, I'm very close with a lot of them. One of them calls himself number 11 because he was 11. And he actually came to our holiday party last year. So we had all the people from around the country, because we're very remote, come together. Our bank is Digital Trust. We have a vertically integrated licensed trust company that's based out of Nevada and Las Vegas. So we did a holiday party there, and him and his wife crashed our holiday party. It's pretty fun.
That's amazing. What was the timeline for getting that product up when you were first building it?
The timeline, let's see, when we brought in the CTO and we wanted to create at least the first time where you could do 24/7 trading, 365 through a platform. We started it in about March of 2018, and our goal was to go live by Christmas. I remember that goal distinctively because that's a big holiday, and it was like on a Monday or Tuesday. And I was like, let's make sure that no matter what the crypto market's doing, our clients are able to do this by Christmas this year. And I remember sitting there, it's Christmas morning. I got an 8-year-old daughter now. She was 4 or 5 back then. And she's over there, Santa Claus, all the gifts, all the fun stuff. And I'm like, refreshing, just waiting to see somebody trade something. We built this amazing tool, somebody use it. And then about like mid-morning in LA, we got a couple of trades through, and it was like my Christmas morning, right? It was like, okay, we created something. We weren't 100% sure if they would use it, and they used it. And to this day, it's really defined our industry. We've set the standard. You have to have this tool. You have to have a mobile app, these things, if you want to serve clients in the crypto IRA world.
Yeah. No, that's, I love the story behind it. And it must have felt like Christmas back when you were, when you were a kid and you kind of shared in that experience. Talk about the security piece. Cause I was looking in and reading a lot about the Bitcoin IRA. And there's this concept that you use to be super secure, which is called cold storage. For my audience members, describe some of the security around, this platform. And then in particular, if you can define cold storage and how that's helpful in you versus kind of traditional hot storage, as they call it, for other kind of software companies that deal with security and data.
Yeah, absolutely. So we were dealing with the holy grail here, retirement accounts. The last thing you want is to have somebody invest something and it just gets lost. and crypto was brand new. So the first thing we did was we got an exclusive partnership and still have it today with BitGo. BitGo, a lot of folks think of them as like the Goldman Sachs or the Brinks of the industry. So they've been designing multi-signature configurations to fit a lot of custody needs over the years. It's all about keeping the wallet itself in ultra cold storage. And that's about putting layers of protection between it and adding keys so that it makes it more difficult. More layers and users and keys are needed in order to extract product from that wallet. Kind of like you got to go through the front door Brinks facility. Then you got to go through cage by cage by cage by cage before you get to the actual value, right? Same concept if you want a good parallel. And so what we knew was from the very beginning, this is paramount, and it goes beyond just the security of the asset. Nowadays, the hardest challenge is the security of the client and the business risk. So the client is your greatest risk, right? Because they can be SIM swapped. They can be hacked on their email. They can be, so many things happen, right? And so you have to put layers of protections to protect your clients from themselves or bad actors that may compromise them. And we've seen a lot of that in the industry and just overall in technology, especially since COVID. It had a big spike, online cyber crimes and things like that. And then the last piece is the business risk. And we learned that this because there were groups like Voyager, Celsius, et cetera, that over leveraged themselves into high yield instruments because that was how they were capturing accounts was, hey, we pay you amazing interest on your crypto. But in order to feed that beast, they had to make riskier decisions with their treasury management. And that in June of this year, that's where we saw a big fallout. Luna, which was a big lost its peg as a stable coin. And then you had groups that were basically becoming insolvent because they couldn't get they had defaults upstream in a very kind of tight knit industry. Yeah. And so this has impacted our entire industry, crypto overall. And in the crypto IRA space, we have about maybe 4 or 5 major competitors, and all of them, I think 4 out of 5 have had a security event that has occurred, whether it's breaches by clients or a loss of the control of their website or their servers because of bad actors think, oh, if I can get in here, I could get at people's cryptocurrency. And that's happened for years on exchanges, right? That they get there. And that's why we use cold storage configuration. And so it's important. Why we lead with security is that we knew from the very beginning, it was what would make us different and help us grow. Because if you have all these horror stories of people that are like, yes, I lost money doing this. The industry doesn't grow. It's almost a responsibility for us as an industry leader to put security first.
Yeah. And when you talk about the different security risks, is that I was talking to another founder who runs a company where they build technology to combat against groups of people who are conducting just like big efforts with ransomware. Is it similar kind of organization?
A lot of those events.
Yeah.
Yep. So whole organizations get targeted. And once they can compromise a piece and if they can find a way through, a lot of times it's internal. Yeah. It's not fraud, but it's internal negligence in a lot of ways because there's a singular user, singular point of entry of failure. And these are things that, to really grow, imagine being a startup and you're not just starting up a company, you're starting up an industry and the definition around it. I remember when we did the first Bitcoin IRA account, at some point we'd gone through regulators and all these steps and we finally just went for the forgiveness instead of permission because we just like, okay, now we did it. So now let's figure out how we can do this and more and more. And of course, at the time, a little upset with us, but now having done what we've created, I don't think anybody's too upset.
Yeah. Yeah. What's if you were to give us a succinct snapshot, why would we invest our IRA into Bitcoin versus the traditional methods? What are the benefits? What are the implications of Bitcoin and other currencies long term that we should be hopeful for in investing in this direction?
Yeah, that's a great question. We're actually sitting right in the midst of it. So I have been, as a student of economics and international finance through CU Boulder over the years, I've always been a realist when it comes to currency. So back before 1971, when President Nixon took us off the gold standard, you could convert your dollars. You go into a bank and give them $20. They give you a gold coin or vice versa. And there was a convertibility factor. And in 1971, we went off of that standard, known as the gold standard, and we became what was fiat money. And as fiat money has grown over the years, it is expanded and expanded. And that's why if you think about when we went to the grocery store in 1985, when I was born, you could fill up a grocery cart for your family per week for $20-$30. And now that's $200 or $300 because there's more money supply out there. Long term, and history has proven this, it is not a sustainable function. And our particular economy, not just the US, but the global economy, has had a lot of strain since right around when I got out of college in 2008. The housing recession that was kind of a backstop that hit with the Fed and the Treasury of TARP and putting in a lot of money to help create what's called quantitative easing. That started in '08. It's 2022. We have never stopped doing those things. In fact, we've accelerated them extremely much so for the last few years. And that's why we are facing this difficult challenge of inflation. It didn't just come out of nowhere. We're like, oh my God, inflation's creeping up on us. How did this guy get here? We created this beast for ourselves. And in order to adjust to it, the weapon that the Fed has is, let me increase the rates. Let me increase the cost of capital so that I can take some of these, help bring some of these prices down and kind of stabilize this economy. The big question mark, not just for the US, but for all central banks is this going to be manageable long-term? And is this solution going to work? A lot of folks want to diversify themselves from that reality. So in the past, you've seen that a lot of folks will run to gold and silver. Now, those have some weaknesses to them, right? It's tough to carry around. It's a bulky thing. You can't use it digitally. It's not easy for commerce and day-to-day trade. Bitcoin solves a lot of those and has a finite supply. There will only ever be 21 million Bitcoin ever. In fact, as more and more are created, the rate of return for those that are creating it is cut in half in our halving periods that we have. The exact opposite of US dollars, where if we create more of it, we get reelected. And so this is kind of a macroeconomic element of your portfolio of saying, hey, stocks, bonds, mutual funds, critical part of a portfolio, but a modern one needs to think about some alternatives. Is it crypto? Some folks look at real estate. Some folks look at other things. It's making sure that you've got multiple pieces of the pie, regardless of how things pan out, which none of us really know at this point.
Yeah. What's the challenge of dealing, you talk about real estate, which is a physical asset. So it's, minerals like gold and silver. What's the challenge of dealing with a digital asset class?
The security of an unknown product is a big piece that we talked about. And then it's education of the client. It's so new. It's like when credit cards came out and everybody was like, I'm never going to use those. I just got good old cash right here. And now we're almost a cashless society, right? We have Venmo and everything else in between. You can't get change at the store because we don't make coins anymore. And so imagine that transition, just like internet and email. There was people that balked at it at the beginning, but education brings folks there. But there's a learning curve to this. And that's kind of why we saw the pertinent need for a turnkey solution for folks that wanted to get into this. It's just, hey, it's as simple as going to Fidelity, putting some funds in an account, buying some stocks, bonds, mutual funds, holding them there and having them as a part of your portfolio. Same concept, just let's use it with crypto.
Yeah. What's the main user for Bitcoin IRA? Is it consumers in particular? Is it institutions? Is it both parties? Who are you typically?
Heavily direct to retail. So heavily direct to the end consumer. And that's because some people call it an evolution, some people call it a revolution, but this evolution of digital currencies is actually retail driven. It is the regular Joe that's saying, hey, I want to add this to my portfolio. Institutions came a little later, back at last year. Actually, MicroStrategy just added another $7 million to their balance sheet, which is a well over a couple billion of crypto that they've held. They're in the game now. But yeah, most of our business is folks that have an old 401k that they had from a past employer, an IRA that they wanted to diversify, or they wanted to get started and just open up an account. Each year you can do a certain amount between about 6,000 to 7,000 to an IRA setting that works out with you.
What are the currencies that you're currently working with?
We have 65. We started with Bitcoin in 16, and then we did Ethereum in 2017. Late 17, like August, we had the BCH fork, so the fork between Bitcoin Cash and Bitcoin. That was an interesting experience. That was definitely a technology challenge of understanding, well, what is a fork? Nobody even knew what a fork was at the point in time. There were people that thought that one asset became useless and the other one became the winner. And what we've learned over now 5 years is they both still exist for different purposes. Now there's 65 other top ones that are used: Litecoin, Cardano, Polkadot, Avalanche. A lot of great players out there in this space. Our pretenses are that if we're going to offer a product, we want to make sure we can keep it safe. So at the same security standards that we have all other assets and behind a $700 million insurance from Lloyd's London. And we want to make sure that we can